While there is general acknowledgement of progress, particularly in the establishment of frameworks and institutions, many stakeholders believe that more needs to be done. Key concerns include the need for clearer policies, stronger awareness, improved implementation, and a more innovation friendly regulatory approach. Non-interest finance is steadily gaining ground in Nigeria, offering an alternative financial system rooted in ethical principles, risk sharing, and real economic activity. From banking to insurance and capital markets, its potential to drive financial inclusion and sustainable development is widely acknowledged. Hello and welcome to Islamic Finance Weekly. I am Rahma Say Mohammed. Despite this promise, growth in the sector has not been as rapid or as widespread as expected. At the center of this conversation lies a critical factor: regulation. Are current policies truly enabling the growth of non-interest finance, or are there gaps that need to be addressed? To better understand how those within the ecosystem perceive the current regulatory environment, we took to the field to speak with stakeholders and enthusiasts in the non-interest finance space. We asked them a simple but important question: are regulators doing enough to support the growth of non-interest finance in Nigeria, and what can be done differently? And here's what they had to say.
We need to try as much as possible to look at inclusivity. How can we, the rapid, approval of products from the phrase side, let's say from CBN, and also looking at CAFO as well. We need more products.
We don't have international banking license, so it means we cannot play in that space at all, right? So we want to be able to solve that problem. What level of capital will be convenient for us to play in international banking space?
Yes, I must also say that in the recent time, the FRC, Financial Reporting Council of Nigeria, has also taken a bold step to integrate some standards, NIOFI standard in particular, into the Nigerian framework. So, given all of this, it's showing quite well that the regulators are playing very quite a role.
It can be done when you have this collaboration between the operators and the regulators.
The policymakers and the regulators, they are essential key to our progress, development, and achievement thus far.
I think there needs to be a lot more engagement to also understand some of the peculiarities of the non-interest financial players in the market.
From the responses, a clear pattern begins to emerge. While there is general acknowledgement of progress, particularly in the establishment of frameworks and institutions, many stakeholders believe that more needs to be done. Key concerns include the need for clearer policies, stronger awareness, improved implementation, and a more innovation-friendly regulatory approach. But beyond these observations, what do the experts say? What specific regulatory shifts are required to unlock the full potential of the sector? To provide deeper insight into these issues, we spoke with a leading voice in the industry, Professor Bashir Aliyu Umar, who shares his expert perspective on the role of regulation in shaping the growth of non-interest finance in Nigeria. Watch excerpts.
One of the greatest impact of the role of the regulatory agencies is in correcting misperceptions about the whole industry. Now people are more convinced and have realized that non-interest finance is just it's an alternative to the conventional finance, and it is not what it was thought to be. It has allayed the fears of so many people, thinking that it was going to be a kind of a certain sectarian activity that is favoring one religious group over another, and now it has been integrated, thanks to the effort of the regulatory agencies, into the organized financial sector. We have these fears have been allayed and these misperceptions have been addressed. But definitely there are still gaps because up till now there are so many challenges. They have tried to create a level playing field, but unfortunately the level playing field has not been achieved to some extent, because these institutions they need to be supported because they are segmentalized. Their market is segmented. They can only deal with non-interest products and non-interest processes. So, but their counterparts in the conventional space, they have the opportunity to delve into the non-interest as well as the conventional. So it's not a kind of protectionism, but it's a kind of certain limits that needs to be placed on the conventionals so that the segmented market will not be overcrowded by by the stronger muscle of the conventional entering into this segmented market and driving away and driving out those who have specialized in this area.
As highlighted in our discussion, the growth of non-interest finance is closely tied to the strength and responsiveness of its regulatory framework. Dr. Bashir Aliyu Umar emphasizes the importance of policies that are not only aligned with global best practices, but also tailored to Nigeria's unique financial landscape. From enhancing regulatory clarity to encouraging innovation and strengthening institutional capacity, the path forward requires deliberate and coordinated action. His insights reinforce what stakeholders have already hinted at: the need for a more enabling, forward-looking regulatory environment that supports growth rather than constrains it. As Nigeria continues to explore diverse pathways for economic growth and financial inclusion, non-interest finance presents a compelling opportunity. But unlocking this potential would depend on one key factor: getting the regulation support. The conversations does not end here. It is an ongoing journey that requires collaboration between policymakers, industry players, and the broader financial community. Because in the end, the future of non-interest finance in Nigeria will not just be shaped by ideas, but by the policies that bring those ideas to life. And with that, I say, don't forget to keep the date with us next week on the program. Follow us on all of our social media platforms displayed on the screen, and thank you for watching.